And then like magic, if I take the MACD highs and extend them. Welcome. I am Eric with Muathe.com, and I greet you in the love light of the one infinite creator. So let's take a look here. We can see that this steel stock, so it's a steel sector stock, is giving us a good example why playing breakouts makes sense. This is a monthly chart going back to 1990. And I want to discuss why playing breakouts makes sense. For example, take a look at this period from 94 all the way to about 04. So we're talking about 9 years, 10 years plus. And then there's this other period here where there's generally a sideways market. In fact, we can even say this was sideways. So you can avoid multiple years of holding when nothing is happening, while you can play breakouts and be part of these explosive runs. So there are breakouts where we see clearance of prior resistance band and we see prices picking up momentum. So we've established in this 1 minute here that playing breakouts as a strategy makes sense, especially if you're looking to minimize your holding period while maximizing the potential for explosive profits. Now, not all breakouts are gonna work, but we all know this. The question becomes, how do you know it's a trap? Or how can you sense, okay, this breakout is not working? Now, there are a couple of things we can do. And I'll go back to the steel sector ETF for the example. But before I leave this chart, I just want to sensitize you to a little known secret. Take a look at what happens here in this price area and what is happening right there this month. We're in March 8th, 2022. There's a reversal there. Both of this and this are happening with the rejection at the RSI 69.1 RSI level. But that's a side note. Take a look at the RSI 69.1 rejection method on my playlist on YouTube. Now let's take a look at SLV, which is the steel sector ETF. And we can see that it was breaking out. Now, the breakout, we can either use this weekly closing high, which I'm going to explain why I prefer that breakout alert. So we draw a line right there. That's the breakout alert going back to this weekly close. That's one option. The price there is 61.67. There's another option, which was this higher weekly closing high and that price level. So that's that 62.41, which is this weekly closing high right here. So either way, it gave us the most recent breakout level. Now, I prefer the older breakout level because, and the chart is getting a little bit messy, but because we had a breakout attempt on these weeks here that ultimately failed. So in my opinion, that breakout attempt was unsuccessful. And so we came back again over the last 2 weeks. There has been an aggressive breakout attempt. But now we can see that prices seem to be, because it's still playing out, seem to be rejected. And we could be seeing the beginning of another failed breakout. So if you are playing the breakout, for example, based on 61.67, or this later breakout from this time period, August of 2021, there seems to be an emerging red flag. So this is your earliest warning that there could be a failed breakout. And a failed breakout definitely is going to lead to selling as people who are chasing the breakout change their mind and they unload shares. Also, on this weekly chart, take a look at your RSI. This is uniform activity rejection around that 69.1 threshold. And if you're not aware about this number, there are going to be links in the description for you to investigate this further. So That's also happening, the 69.1 rejection. And if I take a look at this RSI line based off the lows of early 2020 right here and draw a line, the line connects to the lows nicely here and this low right there. Recently we got a break below that line and we had the market pulling back. We came close here and now we've gone above the line, back below it. And what do I always say? Uniform activity, more than not, tends to suggest it's a trap. So remember, breakouts are also designed to be traps. They are not always designed to move higher. So you need to be sensitive and understand what it takes to identify a situation that is a trap and not one that could be leading higher. Now, taking a look at the MACD, if I draw a line right there, see there was a break of the MACD right there. And if I draw a line as such, you can see that we could be weaving ourselves back below this line with uniform activity. That in itself would be a sign that this still sector ETF is looking to reverse around current level. And then like magic, if I take the MACD highs and extend them, you can see that the market is aware of this top line resistance of the MACD. If the still sector ETF and the still stocks are going to move higher, they're going to have to clear this MACD line and they're going to have to break out successfully above this prior weekly breakout level that I believe is the proper way to look at this, because the other breakout from mid 2021 failed. So now there's been another attempt, and if it's going to be successful, it's going to have to stay above that price of 61.67. It has to stay above this, otherwise it's going to lead to sell off. And if it's going to move higher, if there's going to be momentum, it's going to have to reclaim the level, successfully hold above RSI 69.1. And we can see a good example of this. Above RSI 69.1 is a bullish entry momentum level. And there's another reclaiming of RSI 69.1 here for another bullish entry. Both of those phases above 69.1 were bullish momentum explosive periods, even from a swing trade perspective. Links are gonna be in the description for more. I am Eric with Muathe.com, and I leave you as I found you in the love light of the one infinite creator. Go forth rejoicing in the power and the peace of the one creator. Adonai.